Good afternoon, this is Mike Bartels, the Bear Market Investor, the market update for Saturday, October 22nd, 2011. We're here looking at the S&P 500 stock index in the daily time frame. We're also going to be looking at the intraday time frames as well. Now, I also have a special presentation on silver for you this evening. I do hope that you pay attention and stick around for that, because I really think it's going to be interesting to watch and see what the opportunities may be coming up for us in silver. Now, one thing that I did want to say was that I apologize. I had really not been able to produce a video anytime recently. I think maybe the last one that I did was in and around this peak, or perhaps in this peak right here, somewhere in there. Nonetheless, what I was seeing here was that it looked like we were probably in an ending diagonal, but that was not necessarily a for sure thing. What we saw here was a clear five-wave push to the downside, okay? And I don't think that's up for dispute at this point. What we saw from here was a three-wave push to the upside. Okay, sounds great. But then we saw what appeared to me to be a three-wave push to the downside, or at least just another leg, followed by another five-wave push to the upside. In fact, what it looks like probably was the case, as I noted in the prior videos, this was hard to read and this was hard to read. What it looks like actually occurred was that we did have five waves there, but that was actually the first wave of a three-wave decline right there. So we had five waves down, three waves up, five waves down. We had five waves up, three waves down, five waves up, for a three-wave pattern to the upside. This was far too sharp right here at the bottom to be construed as a five-wave decline. I was really thinking that something might be going on there, because when we pulled back so deeply, it raised the possibility at that point that we were an ending diagonal. Now, there were a couple possibilities there. Either that wave 4, which I had prior to this counted as a double zigzag, ending or terminating at this point right here, was actually a triple zigzag terminating at this point. Because we never actually broke below this wave structure right here, this X wave, we were never actually able to really give enough indication to me to be certain that we had in fact broken down from our fourth wave. So this was always a little bit up for debate. So did we end it here, or did we end it here? Now, what ended up happening, of course, was that we had that three waves up right there, and then three waves down. You can see just how sharp these moves are towards the end right there. And this was entirely indicative of three-wave pushes right there. Now, what was interesting to see was that when we did actually come up and rally here, it became clear that we had a very irregular shaped ending diagonal. While the trend lines really to some extent still converged, it just doesn't do it very well. This is definitely not an ideal ending diagonal right here. This is a really crappy one. Certainly not textbook. So it does fit the wave structure and it makes sense, but ending diagonals are very, very difficult to to be able to predict. Certainly we were seeing some indication that that was the case, but one thing I was noting here was that this was a very long third wave. Typically you'll see a longer first wave in an ending diagonal, followed by a slightly shorter third wave, and then an even shorter fifth wave. That really wasn't the case here, but in any way, this does actually fit the wave structure. So no harm, no foul. It just wasn't exactly the way I expected to unravel. But really, what we did get was what we were always saying that we should get here, which is wave 1 down, wave 2 up, wave 3 down, wave 4 up, and then wave 5 down. This helps confirm that in fact we are in a larger bear market here. As I noted in the past, let's go ahead and back up, and I apologize, this chart is going to get pretty ugly here. What I wanted to do is show you part of the reason for that. It's because of the fact that we're overlapping this now. Because of the fact that we're overlapping this means that, this being the top of A right here, A wave, B wave, and then we had our C wave topping up there, that we can't actually, continue higher in a fifth wave. So this is not a larger bullish pattern here in the weekly and monthly time frame. Now, what I can say is, at least from a perspective of, a third wave, that is at least a possibility, but I really am bearish. I'm not considering that count to be valid, meaning I don't expect that this push right up to this point right here was wave 1 of 3. I really am not seeing signs of that type of wave activity, and certainly what we were seeing in the weekly time frame was a lot of weakness, and we shouldn't be seeing that as it pertains to a third wave fast approaching here. And with 5 waves down here, this tells me that unless of course we had some sort of expanded flat second wave, that it's more probable, of course, that we are in fact in a larger bear market. And certainly when we take into context the 5 waves down that we had from the peak in 2007 to the lows in March of 2009, that suggests that we should see further downside as well. Now, some Elliotticians have also said that that is likely an expanded flat that already terminated and that we are now in a new bull market. However, I think you can probably gauge from the type of madness going on in the world right now with regard to just the amount of debt out there and the issues in the European markets and just throughout the globe, that we probably aren't just about to explode to the upside. Now, as far as the S&P 500 is concerned, as I noted, we had our 5 waves down. That's confirmed. Now, what we're trying to do is we're trying to determine where exactly we should stop. Now, from some analysis that I've done here, I think we're actually more likely to terminate the second wave in and around this point right here. Actually, I should say probably our ideal target range is between here and here, right at about that point. So what I'm thinking is that we should actually see a pullback. It could be a very steep pullback, but then we should see a rally into towards the end of November or beginning of December. It could last slightly longer than that, but based on my cyclical analysis, what I'm expecting here is that we are going to see a pullback down. When I've been looking at this wave structure, this has been really, really difficult to call at the moment, and it does at least bring up the possibility that we have already topped in wave 2. But as I was showing you here, just based on the length of time here that this entire decline had taken, for a wave 2 to be completed at this point in this short period of time would be pretty unrealistic. Possible. There is no necessary amount of time that this would have to take. However, it is really quite short, at least from a time perspective. We have had a very steep rally into where we are right here, just, I believe, cresting slightly above where we did back here. Now, I think we're probably in and at about a point where we're going to start seeing a pullback here. And like I said, it could be a very sharp pullback. If this was indeed a 3-wave rise, meaning we had 5 waves up to maybe this point right here or this point right here, followed by another decline, then another rise, meaning kind of an ABC pattern, it could actually be a 3-wave pattern of perhaps a flat or an expanded flat. So if we actually saw 3 waves down, that would suggest, of course, in any case, that we should see further upside. The real question is whether or not this is 5 waves that's just about to conclude or 3 waves. We'll have a look at that in the intraday time frame here, but I wanted to show you the big picture. We did have our 5 waves down. That's exactly what we were expecting. This played out perfectly, and as I noted, I'm not long this rally here. Now, even though you could make some money in a rally like this, I am not able to really ascertain the proper wave structure for this push right here. Even though I know we're near some sort of top, I do think that we're going to see a pullback, but I really don't think that this correction is done yet. I'm not able to ascertain whether we're going to see a very short pullback followed by further upside. We're going to see a strong pullback and followed by further upside, or how exactly this is going to look. More than likely, we'll see a moderate pullback here, maybe into that 1170 to 1150 area, followed by a kind of laggy C wave to the upside. But if it does turn out to be some sort of expanded flat, we could even see this low right here taken out ever so slightly before moving up. I just think that's probably a little less likely. It doesn't mean that it won't happen, but I think it's a little less likely. Now, triangles cannot occur in this position, so we are not looking for a triangle, a larger triangle to erupt at this point. Those happen in 4th waves or B waves, not in a second wave. And right now, after having bottomed in intermediate wave 1, we are now moving up to complete intermediate wave 2. And as I noted, I'm expecting a top in and around that point right there after having a pullback. So let's wait and see what happens. Now I want to pull into the intraday time frame here, and we'll have a look at that before moving on to silver. Okay, we're looking at the 15-minute time frame of the S&P 500 stock index. What I want to do is show you just how messy this chart looks, and this is really a difficult call here from an Elliott wave perspective as to what the actual proper wave structure is in the S&P 500. There is a possibility here that we had a wave 1 up, wave 2 down, wave 3 up, wave 4 down, wave 5 up. We entered into some sort of flat style correction right here, ending at this point right here, followed by a wave 1 up, wave 2 down. We have a wave 3 up that does not quite look yet complete. Probably see a pullback and then a little further upside, suggesting that in fact we have a 3-wave pattern there. However, there are other ways of also counting this, and it may become more clear once we see that top in place. But like I said, just because we see the possibility of a 3-wave rally here does not necessarily mean that the correction is over, that intermediate wave 2 is over. In fact, like I said, from my cyclical analysis, what I'm seeing is that we should see a more likely top occur in intermediate wave 2 towards the end of November or beginning of December. And if this is a 3-wave rally right here, then I would expect to see some sort of pullback, as I had noted, into that 1070, maybe a little bit lower into that 1050 area. But before going ahead and having kind of a sideways, very weak C wave, I guess, I don't expect that we're going to be exploding to the upside, and really knock the socks off of anyone in the C wave, unless, of course, we actually do see some sort of flat formation here in intermediate wave 2, where we actually see a strong pullback. Then, of course, we would expect to see a strong 5-wave rally to the upside. Now, those are the kinds of foolers for a lot of Elliottians. When you actually see 5 waves, in that context, it can actually make you think, or rethink, I should say, your larger wave structure. However, as I noted right here, a flat is entirely possible if we see a deep pullback here followed by a 5-wave rally. But it really is anybody's guess at the moment. We could even have something similar to a double zigzag where we actually had some 3-wave pattern here. We see a pullback and then another 3-wave pattern. We just have to wait and see. These are all different possibilities, and the wave structure looks fairly well complete for 3 waves to the upside right now, but as I noted, that doesn't necessarily mean that the intermediate wave 2 is over. It just simply looks too short. It doesn't agree with my cyclical analysis, but that doesn't necessarily mean that it isn't the case. So I am expecting a decline probably to begin early next week, maybe Monday or Tuesday. It could last a little bit longer, meaning we could actually see the market continue to inch up into the middle of next week. But I'm really thinking that this market does not have much more upside. I'm thinking maybe in the 1250s area before seeing that pullback if we get there. Maybe the 1254, 1256 area. So let's wait and see what happens. Now I want to jump into silver here in just a moment. I really, as I noted, have a bunch of interesting things to say about that, so I hope that you stick around. Okay, we're looking at the World Silver Index priced in US dollars in logarithmic scaling in the daily time frame. What I want to do is talk about the wave structure that I see here in silver and what the different options are with regard to silver in terms of wave structure and price. Now, let's talk about what we do know. What we do know is that we had a very parabolic rise into the peak back on April 25th of 2011 at $49.82 an ounce. From there we had a wave 1 down, wave 2 up, strong 3rd wave to the downside, 4th wave up, and then a 5th wave down. Now keep in mind, we're looking at this in logarithmic scaling. Okay, so this is a very steep decline. And this was actually a very minimal retracement here in a 4th wave, which is what we would expect because we had a very maximal retracement here in the 2nd wave up. From there, it looks like we probably entered into a double zigzag or something to that effect, ending at this point right here. From there, we had a wave 1 down, wave 2 up, wave 3 down, and I believe we are currently working on a 4th wave. Now let's talk about this for just a moment. 4th waves can have triangles. Triangles occur in 3-wave patterns, or made up of 3-wave patterns. Okay, so we have 3 waves to the upside, 3 waves to the downside, 3 waves to the upside, 3 waves to the downside, and then I believe 3 waves to the upside to conclude that. That counts like this: A, B, C, D, and then E. Once E completes, I believe we will have a fifth wave to the downside in precious metals. Here, well, I should say in silver. And what is interesting is that this E wave termination may coincide roughly with when we expect a decline to occur in the equities markets in the S&P 500 stock index. Now, where would silver terminate its fifth wave? Well, by taking this low right here and this low, I'm able to establish an area of support. I think it's very probable that we may move into that $25 range, but probably not much below that. What we do know is that this fifth wave right here bottomed at $32.30, whereas that third wave bottomed at $33.05, not moving well beyond that third wave low. So I believe this is entirely consistent with a thrust out of a fourth wave triangle, bottoming only slightly below this $26.15 at around that $25 area, finding support in and around this point right here. From there, this is where it gets interesting. We have this first wave down, if you want to consider that part of an impulse pattern, bottoming in at that $32.30. Well, let's go ahead and hover our crosshairs right at that area. Follow that over, if you will. What you see is that happens to be in and around the price territory of our fourth wave that we're currently working in right now, and where we might expect wave E to terminate. Little bit of an interesting conundrum here for the bears. Okay? Because what we do know from an Elliott wave standpoint is that when we do put in that fifth wave to the downside, if this is going to occur, it tells us that a fourth wave to the upside would move us into the price territory of the fourth wave of lesser degree. That means that we would move in to the price territory here between $26.15 and the point right here where wave 4 was at its peak at $33.59. Okay, so since that exceeds this low right here, that would cause wave overlap if it were to actually move into this price territory right here. Now, it still could move into the price territory, obviously, of the fourth wave of lesser degree, and would in a fourth wave, but in order for it to actually move into the territory that we would most expect it to, which would probably be in and around this point, that would cause wave overlap. That suggests to me that in fact we are in an ABC correction. What we do know about metals is that typically they tend to top after the equities markets do. As I was saying, we are in intermediate wave 2 up in the S&P 500 stock index. If we rewind all the way back to 2007 and 2008, we had precious metals continuing to move higher, making new price highs after the equities markets had already peaked. When intermediate wave 2 was going on, the precious metals were making new highs. Precious metals always make their strongest moves in the fifth wave, okay, to the upside. Those are the most parabolic rises. This was certainly a fifth wave of some degree, but whether or not it was really the fifth wave, the peak, remains to be seen. So I'm thinking this is probably an intermediate wave top, a wave 3 most likely, and that we have on our hands a giant A, B, C wave move. Now, if that's the case, and after another decline here, put in the fifth wave of C, that would suggest to me, based on some historical precedents, that we would see an absolutely astonishing parabolic move to the upside in silver in a very short period of time. I would think that if that were to occur, that we could see silver move well past that $49.82 an ounce and terminate roughly around the same time where we expect intermediate wave 2 in the S&P 500 stock index to terminate. Well, now if that happens, that is a very potentially lucrative opportunity, because that is roughly a doubling in probably a month or a month and a half, maybe 2 months. And I expect that if we do have that fifth wave put into the upside, an intermediate fifth wave, that we will probably see it well exceed that $49.82 an ounce. So let's wait and see what happens here. Very exciting stuff here in silver. Now, let me throw out word of caution. If you do invest in silver, please, please, please put stops in place at appropriate points. Manage your risk, because silver, if you get it wrong, can absolutely destroy you with the types of moves that it makes in this amount of volatility. You can lose a lot of money very quickly, or you can earn a lot of money very quickly. That is the way silver operates. So this is not for the faint of heart. But I wanted to show you the wave structure and the way I see it at the moment. And, you know, big picture, long term, this is also an extraordinary opportunity for the bears if that were to occur. Let's say that we go and we put it at peak in at $70, $80, $90, $100 an ounce, whatever that may be. That is the shorting opportunity of a lifetime for the bears, because I can expect that if this is anything like the 1980 peak in silver, assuming we haven't already had it, that we are going to absolutely see silver decimated after that. It will go from $70, $80, $90, $100 an ounce all the way back to down where we are right now, probably very quickly. So, you know, I'm hoping that it goes up. Look, I'm a bear. I think deflation is inevitable, but if silver does something like this, that's going to be really exciting, you know, for both long and short positions. You know, I'm certainly going to take, you know, advantage of a long position if it makes sense to do so. I want to see this wave structure continue to materialize before I make that decision. But I want to show you what the wave structure is telling me at the moment. What, at least in the near term, I'm thinking is likely, which is that fifth wave to the downside, bring us into that $25 area. Then let's wait and see what happens. But certainly the opportunity for the bulls there in silver in the short term, you know, after that next push to the downside, if it occurs, is quite lucrative, because that would move us up very quickly, and potentially for the bears then move us down very quickly after that. So anyway, I hope this was an exciting presentation on silver. Please do comment on the video. Please do give a thumbs up if you like it. I always like to see that encouragement out there to continue making these videos. I'm really excited about silver. I think there's some great opportunities there. Certainly the wave structure is telling us a whole lot right now, and I hope that this actually pans out the way that I think it may, because it is going to present an opportunity of a lifetime for investors.